Okay, we've got an extended hot picks with Eric Jackson, who still continues to join us on the desk of EMJ Capital. Eric, thanks so much for sticking with us. And your approach, you've always been a fundamental investor, but recently you started using more and more AI to govern your decisions. Just remind us of, that and how that works.
Yeah, basically, AI is going to revolutionize every industry and sector, including investments. And why, instead of thinking about like what next stock, can I pick that has exposure to AI, I started thinking about a year ago, but like how is AI actually going to transform the selection of new stocks in a portfolio and portfolio management? And so that's what we've built over the last year, and started running that AI-centric, ML-centric portfolio on June 1st. And so, there's still human judgment involved. We don't take the computer, 100% of the time, and that's why I'm here and not on a beach somewhere. So I am still involved.
Which I have asked. I've asked, well, what are you doing here? Let the machine do all the work.
But it's been a great tool, I found, as an investment manager, just to, be very clear about when to look at a certain stock, when to get out, be less married. I had a bad habit of kind of falling in love with certain stocks and kind of wanting to hold on to them through thick and thin. Now it's a much easier just to say, okay, I'm going to short Tesla today as opposed to continuing my long position and then get back in a couple of months later or something.
Okay, so good insight. Tesla's not one of the ideas. Something that's screening as attractive right now is small cap tech. Is that?
Well, I've tried. I know how you love the profitless tech, Amber. So I tried to,
Just
come up.
Nobody will come on and say that. Everybody says I love quality,
right.
Good balance sheets, and you're like, look at the worst balance sheet.
Well, it's hit and miss. Obviously, you got to do some work. But the AI model has flagged certain companies that. I've scratched my head sometimes. Like, I didn't even know this still was a public company. So
like Groupon.
Like one is Groupon for sure. This came up like, I don't know, it was May, June or something that the model flagged it. It was something like $4. And I'm like, this thing is still around. And I remember like this was, talk about Instacart. This was the hot IPO of the day in 2011. It's down like 99% since then. When I saw it on the screen, it was like $150 million market cap. It's gone up. Now it's like, I don't know, 350, 400 million.
I mean, it's still a $500 million business when it comes to sales. Like, I can't remember the last time I even knew of somebody who was using a Groupon.
The amazing thing, though, is that it's run by a management team now out of the Czech Republic. No longer Chicago. When I started to look at this thing, I'm like, how did that happen? And basically, these folks had built and sold, very successful, cost-conscious web businesses over there, and they decided to kind of take some of their winnings from their past successes and basically buy up 20% of Groupon publicly. And then they went to the board and they said, hey, we actually think you've got a future here as a company if you did the following kind of turnaround plan, cut costs, focus on international a lot more than you guys have been doing because it's still traditionally like a North American-driven business. We think there's like a path to like a very healthy business. And the board liked it so much they said, hey, why don't you run the company? Here are the keys. And so basically that's now they're running this thing out of Prague.
Thank God they came along. There you go.
So they've only reported one quarter as a management team, but they're already EBITDA positive again.
Wow, okay.
They're cutting a lot of costs. They're, again, like I said, focusing on international. So the thing is like a $12 stock today, but if you think that it's going to continue on this sort of trajectory, and if you think they will get a kind of a normal enterprise value to EBITDA multiple, this could be a $100 stock in a year or so.
Consensus is expecting it to grow in 2024 for the first time in almost 10 years.
Right.
and to be profitable.
Right. So the board will look pretty smart if that comes to pass, and it could be a potential home run. So.
Okay, Groupon, that's one. Taboola, an ad agency that's kind of doing what you're doing with your fund, implementing AI.
Yeah, basically, like all the, if you're a small business, you want to advertise on the web, you've got, you can advertise on Google and Facebook, and then there's everybody else. There's like all these other websites, some of them call it the open web.
Yeah.
And Taboola is sort of like in charge of placing ads to the rest of the internet, basically. And so they have their niche, and they've definitely, there's definitely an AI aspect to it. That's another one that's been kind of pounded down. They IPO'd in 21 for like 20 bucks a share or something like that. 22, they're at $3 now. But the most interesting thing with them is they signed a big deal with Yahoo about 6 months ago to basically take over kind of, the ad placement for all Yahoo sites.
Okay.
And Yahoo,
another retro. This is just like digging up the 2000 graveyard.
Even though they're a dinosaur, they still have enormous traffic. They're going through kind of a bit of a renaissance right now because they're owned by Apollo, and they have a new management team in place there. Eventually, they are going to IPO at one of these points again, and they're doing well. So, but basically, Taboola, the deal just went into effect a couple of months ago, so it hasn't yet shown up in their results. The stock is basically, it's only up 20% year to date. And yet this new Yahoo traffic should start showing up over the next few earnings quarters. So if it works out, it could be a big boost to them.
Okay, Affirm is the last one. I'm not as familiar with this one. Is it like it's had a big move recently.
Buy now, pay later.
Yeah.
So basically, like when I went to buy my iPhone last Friday, I got to the end, and you can either pay everything right away you put it on your Visa or whatever, or you can. The only option that was available was Affirm, and I could pay it over certain payments. I don't know what it was, 4 or 5 kind of monthly payments. Break it up, and so they used to have a lot of competition a couple of years ago before the bottom fell out of the market. Now, there was one Australian company that Square bought, and then there's one out of Sweden, Klarna. But Affirm is sort of like the biggest now. They're the only public company. They're down a lot. I mean, they were $200, not too long ago. A couple of weeks ago, they were like $14. They've had a bit of a rally since then. They're up to 25. Basically, Max Levchin is the guy who founded it, PayPal Mafia, and he still owns a big chunk. So if you think that they're going to be kind of one of the winners here and kind of survive with this model, they have big upside.
All right.